I think we're very pleased with the numbers. I think we're exiting quite nicely from the COVID situation. We're beginning to grow our primary customer at a higher pace than before. Our fee growth are very strong at 20% up year on year. Risk costs are modest, the way we see things, and our capital are strong. So really a solid quarter. We're very pleased with it.
From you on impairments and also whether you think you're overcapitalized with a CET1 ratio at 15.8%.
Yeah, I think despite since the dividend ban coming off and that we are paying about 1.8 billion euros in dividend in October, we're, as you know, in the middle of a share buyback during this period that runs until the end of Q1 next year. Even with that, we're still standing at quite a high capital level compared to our targeted approximately 12.5% capital level. So I think we are going to make a convergence from that 15.8 to around 12.5 over the coming period.
Sir, can you give us a sense of how you're doing on the cost front and what the outlook is for further cost cuts?
Yeah. I think this quarter, if you compare to previous year, we're down about 1.3%. The cost evolution is going well. We intend to continue to focus on cost efficiency and bring costs further down. And I think, the trajectory of the cost is clear. We are gradually bringing costs down in line with our expectations.
Going well on the cost front. What about on the growth front? What are you seeing in terms of lending patterns? And how are you thinking about 2022 growth rates?
Yes. I think in terms of lending growth in the retail bank, things are normalizing quite quickly. We see that in mortgages, the level of growth is matching pre-COVID times. Consumer lending is coming strong. Business banking is still a little bit patchy. And there's some volatility in the wholesale bank. But I think we're quite confident that over the coming period, we will resume growth at around 3 to 4% per annum kind of loan growth across, wholesale and retail banking. So I think we're quite optimistic as we come out of COVID in the European economy in particular, that lending growth will resume.